Hi everyone, JR with Secure Metals with another technical look at both gold and silver. Today is Monday, July 15, 2013. It is 11:11 p.m. Eastern Standard Time. And today I will do gold, silver, platinum, palladium analysis. I will also throw in the US dollar and maybe I'll do some ratios and maybe the Dow Jones if I have time. So a lot to talk about here. Actually, not that much to talk about. This is your daily chart. As we can see here, gold is in the process of climbing higher after seeing a big dip here back in the middle of June. And as of now, we are trying to make our way higher. Now that we are above the 20-day moving average, still have 50 and 100-day moving average above us. Not too positive. Stochastics are still in the strong zone, so we could see further movement to the upside. We have a lot of resistance here, guys. So it's 1300. That's resistance. That's going to hold us down. You have your 20-day moving average. Currently, we are above it, so that's a little positive, but not too much because, again, if you look at this 20-day moving average, it's pointing to, let's say, 5 o'clock, and that's not too positive. I like to see this 20-day moving average begin to curve. That's when it'll start looking a little bit better. But as of now, again, really very difficult to predict if this is going to continue to go higher or if it's going to go lower. Hopefully, if it comes back down, it'll be held up. It'll find support here at this medium-term trend line here. Okay. Now, we also have to be very cautious here. We might have found the bottom. If you look at what happened here back in 2008, we saw a move here from the highs of 1032 down to 681, a loss of 34%. Never touched this 61% Fibonacci coming from the from July of 2005 all the way to the highs of mid-March of 2008. So again, the 50% Fibonacci retracement would have been 657. We never saw that test. We saw 681, and we saw this go up multiple times, and very similar to the pattern that we saw back in 1976, which I highlighted previous video. Really nice bullish engulfing candle. Okay, anytime you see a nice candle like this over completely engulfing the candle, the previous candle, it's called a golfing, a bullish engulfing. Obviously, if you find it on at the top of an uptrend, then that would be a bearish engulfing candle. So as of now, we could find some tests here to the 1252, which is the middle of this candle here, and before this thing continues to go higher. Stochastics are pointing up, so we could see this metal continue to go higher. Let's see here. Let's look at silver now. Silver, really the exact same thing. Over the 20-day moving average, looking to test this 2150 range all the way up to the 23% Fibonacci retracement, which would be at 2228. So again, stochastics are still on the strong side, so we want to see if this line here is going to hold us and find support roughly at around 1950 to 1930. Hopefully this small upward trend line will also hold us up. Again, 2050 and 100-day moving average are above us, and the stochastics again are still on the strong side, so still room for more upside. Here is your weekly chart. Same pattern that we saw back in 2008. We don't know if that's going to hold or if it's going to go down a little bit further, but as of now, it does look like it has found some support. Currently above this line, which is positive. We don't want it to go too further down than 1930, roughly around that price, but it does look like it's looking to come up to the 2150 range, at least for now. But again, a lot of resistance. Let's look at the platinum chart. All right, this is your palladium chart. Okay, palladium chart, stochastics are on the strong side here. This can potentially continue to go up higher. I really like palladium right now. Platinum and palladium two great metals right now. The long-term fundamentals on these two metals are phenomenal. Palladium is reaching all-time highs as far as holdings. So is platinum. I think I highlighted that in the previous video. We most likely will find some support roughly around the 1760 area. But as of right now, it does look like this thing is trying to climb higher. So again, this is your this is the tunnel in which this is trading. So a very big range here. Again, we will look to find some support resistance here. Anywhere between 755 to 765, we're going to find some resistance. So again, this would be the time to start taking some profits here on your Palladium trades. Stochastic still going on the upside, but again, Palladium and Platinum have a lot of great fundamentals that are most likely going to continue to make this thing go much higher. Again, given our current situation, we might see a little bit of a correction before we continue to go higher, but ultimately I do expect to surpass the 770 range and go much higher. Let's look at Platinum here now. Platinum, again, stochastics are still on the upside here, building a little bit of a bearish formation here, so we might see a little bit of a correction back down here to the 1380 range. Platinum fundamentals look phenomenal. All-time record holdings right now in platinum. Literally every day we see more and more holdings in platinum. So again, the fundamentals look very good here on this metal. So again, we would look to find resistance here, support here, roughly around the 1380 range. If that doesn't cover it, I would like this line to give it the support that we're looking for, which again, this chart is a little bit weird. So, but again, we would look to find support here at this line. All right. Again, currently looking to test the 50-day moving average, and then of course we'll be targeting the 100-day moving average. Let's see here. So again, this is where we're looking to find some resistance here between 1460, 1470. All right. Let's look at the dollar. This is your dollar index. Dollar index building a very unique formation. I've talked about this formation. I've actually said that Dow Jones is currently in this formation. Is a fairly bearish formation. Is not the most popular technical formation, but we still do have to keep an eye on this because this is what it's doing. It is creating higher highs as well as lower lows. So this would be your first line. Let me delete this here. And this would be your second line. So again, you're creating higher highs, lower lows. This is called a this is called a broadening formation, where you have these prices act the way these prices are acting. Okay, so this is a very bearish formation, which is positive for the metal. This is your dollar index, so we're looking to target here with this formation somewhere around 79 here in the next coming I would probably say in the next, before the year is up. So again, this is a fairly bearish formation. We could see this thing go higher, but again, only time will tell. But again, usually these formations are fairly bearish. As a matter of fact, I just spotted this formation right now. The British pound versus the dollar has that exact same formation on the daily chart, I believe it is. And as you can see, there it is. It's usually, again, anytime you test these, this is usually what happens. So we could see this just like the dollar index, where we're looking at prices roughly around here. We could continue, we can go higher, create a new high. We'll see what happens. All right. And that's your dollar. Let's do one last thing here. Let's do some ratio trading here. All right. Last thing here. Okay, so this is your ratios. So finding resistance here at 66, found resistance here at 65. And we'll see if this is going to go higher. If it comes back higher, then we could see a little bit of a correction in the metals. But ultimately, this is already pretty high. Again, stochastics are fairly confused, and we are above the 20-day moving average. Not good here for the short term on the metals, because this can test back this high. We want this ratio to go down, not up. Okay. And again, stochastics, so we're above all these moving averages, and we do have a fairly good trend line here, as we can see. So we'd have to break this trend line. We'd want to go below 60. I think if we can get below 62, we can see a good rally here on the metals. All right. And last but not least, let's check out the Dow Jones now. Here is the gold versus Dow. Now, I've said it before, the gold and Dow usually trade in a positive correlation. We saw divergence here. We saw another divergence back here. I've shown them before on previous videos. We had this thing come back here, and it's acting positive. And roughly here, we had the beginning of a negative correlation where we do the exact opposite than what the Dow Jones is doing. But if you notice roughly here, it looks like this. It looks like it's trying to come back to a positive correlation. I think I mentioned that not too long ago. So really, what we're seeing is exaggerated moves, the same kind of moves that we're seeing here in the Dow, but much more exaggerated. And again, keep in mind, this is the Dow Jones. This is gold. So you saw a little bit of a dip here. You saw a big dip here. You saw a correction to the upside. Come down one, come up, and this is what it did. Came down, came up, and then you had another big move to the downside. So it looks like they're both trying to go up higher. Obviously, the Dow Jones. So it looks like we are beginning, and I think I mentioned this on the previous video also, it does look like we are beginning to trade on a positive correlation, which would be positive for the metals as well, because we expect the Dow Jones to continue to go higher, right? And this is your Dow Jones chart. And I think I said last time when we saw that big dip, I think I also mentioned if you're gonna get into the market, that was the time. I hope you were paying attention, because again, we did see a decent dip. I would have liked to see this thing correct a little bit more, but it didn't. But at least if you got in when I said it, I think you were able to make some cash. And stochastics are oversold here, so it could, but they still are on the strong side, so they could continue to go higher. We did have a little bit of indecision here in this candle. So again, we don't know if it's going to continue to go higher or if it's going to correct back down here. But I really like this. This right here, because you'll find some support here and hopefully continue to go higher if that's the case. But again, being very careful, guys, because we've seen it in the dollar chart, we've seen it in the British pound chart versus the dollar, and we are currently looking at it in the Dow Jones. Now again, keep in mind, this is the monthly chart, and the monthly chart is an extremely slow chart. It can take up to 7 or 8 months for this chart to even complete. As you can see, this move to the downside took roughly 1 year and 4 months. So again, this being the yearly chart, we could see this thing come up here and then again take another 1.5 to 2 years before it continues to go down. But my guess would be that we're going to test some of these levels maybe for the next year and a half. I don't think we're going to see a huge move to the downside. If we do, you'll see Bernanke print more money and push this thing up until eventually they can't print anymore, and then we'll see the market bottom. But this is definitely where I see this within the next 3 to 5 years. Again, kind of hard to put a timing anyway, but that's what I would say. 3 to 5 years, you see the Dow Jones back here around $5,000. But that's it for today, guys. I hope you enjoyed the video, and tomorrow I'll do another one, but it'll be a little bit more on fundamentals. I hope you enjoy the analysis. All right, bye-bye.